Hello everybody, welcome to another video. Today I'm going to talk to you about options trading. Yes, option trading. It's a little bit of a sticky subject, but I'm going to go over the basics, the very basics. So if you're an experienced options trader, please keep this video because it's not for you. You're going to cringe to the information you're going to listening to here. But if you are someone that is willing to learn about options trading and you're kind of curious about it and starting to inquire about it, please keep watching. This is for you. If you're trying to learn about options and you're trying to figure out if this is for you, I'm going to give you some basic information that's going to help you down the line. But before I start the video, let's go over some household rules. First of all, I'm not a financial advisor, nor am I encouraging you to trade options. Second, trading options involves significant risks and is not suitable for everyone. Now that we got that out of the way, let's dive right into it. What is options trading? Well, options contract gives the owner of the contract the right to buy or sell a specific number of shares of a stock at a certain date. Remember that, the right to the owner of the contract to sell or buy a number of shares, specific number of shares at a certain date. Let's give you an example. You have John and Jane, okay? So John thinks that Amazon is going to go up within the next 30 days. So he is bullish on the assumption. And Jane thinks that Amazon is going to go down in the next 30 days. You need a buyer or seller, and you need a counterpart on the other side. So John is bullish because he thinks that the stock, Amazon stock, is going to go up. So he opts to buy a contract of 100 shares of Amazon, and say Amazon right now is trading at 3,300. Let's round it up because I believe it's $3,280 as of the recording of this video. So let's say Amazon is trading at $3,300 and John thinks that Amazon is going to go up within the next 30 days. So Jane takes John on the assumption and she expects Amazon to go down. So by the end or before the 30 days, it went to $3,400. So John makes $100 per share on his assumption, and Jane loses $100 in her assumption. So now John, remember, he has the right to either buy Amazon at $3,300, which is the price when he entered the contract, okay? Or he can just simply sell his contract for the winner. If John decides to exercise on his right, then Jane will have to buy the 100 shares at $3,400 and sell them to John at $3,300. So this is how option tradings work. I hope that example is clear. If not, please feel free to drop a comment below and let me know. So just to recap, options trading or options contract gives the owner of the contract the right to buy or sell a specific numbers of shares at certain time. In the case of John, he won because his assumption was that Amazon was going to go up within 30 days. So I want to tell you the 3 ways in which options trading comes in handy. Number 1, to hedge a position or a number of shares that you may own or of any given company. Number 2, to generate income. Third, to speculate. This is what happened with John and Jane. This is a trading strategy. So John was speculating that the stock was going to go up. He was bullish. And Jane was speculating that the stock was going to go down. So she was bearish. So remember, I told you at the beginning of the video, this was going to be very basic information, because if you're starting to inquire about options trading, and if you're starting to learn about it or curious about it, I don't want to bombard you with all the technicalities, the number of trading styles, the number of strategies that can utilize trading options, which are a lot. So I just want to give you the basics, explaining what options are, how you can use it. There are three things now that I want to tell you that you should look into whenever you're going to trade options. Number one is the price of the underlying or the stock. Number two is time decay. For every day that passes by when you are in a position trading options, time decay or theta will take away from your cash. Volatility, a very, very important one. You should look into volatility because any sudden move within the markets when you're in a position, it could completely wipe out your position. So one of the components that you should know about options also is that, John and Jane, they were, against each other, so to speak, on opposite sides of the spectrum. That's a better explanation. And the market maker is the one who mediates and makes that trade possible. Okay guys, this is all I have for this video today. I'm gonna leave it here. Again, I wanted just to make a very, very basic video about options trading. If you have any questions about what you heard in the video, if you were not sure about something that I said, feel free to drop a comment below. I'll be happy to answer any questions that you may have. Also, don't forget to make that like button blue. It will help me a lot with the algorithm, and also do not forget to subscribe. Thank you so much for watching. That's all I have for now, and I'll see you in the next video. Thank you.